Hi guys, what is going on and welcome to today's YouTube video. Today we have a very important day for Bitcoin because we got the CPI data release coming at 2:30 Central European time today. We're going to look for potential short positions that we can take during the CPI data, but we're also going to look for potential long positions. I do think we got some nice potential setups coming in soon for the Bitcoin price. We are still range bound. We are still, in my opinion, within that fourth wave before getting the final impulse to the upside. Higher time frame, we can get that manipulation part below the range low before getting that impulse. But today I want to look a little bit more at some intraday trades that we can take potentially during or potentially after the CPI data release today. Do keep in mind what I always say about these events. They don't change the price action. They usually only speed up the process of the price action. And that doesn't mean that you cannot trade during the CPI data. All that it means is that you do not want to market enter any positions right before the release. Now, in my opinion, guys, we are still range bound, but soon we will get a breakout out of this range. Maybe we will see a breakout today. Maybe we don't. But I do think that if we are going to check the higher time frame, that we got a lot of liquidity resting above the range high, and we also got a lot of liquidity resting below the range low. So in my opinion, the first move out of this range will be a fake out. What do I mean by that? A lot of you guys might have heard about these PO3 patterns, in which you have the accumulation part, the manipulation part at the top or at the bottom, before you get the expansion slash distribution part to the upside, or you can get it to the downside, right? Now, since this is such a clean range, we have a huge liquidity buildup at the top of the range and a huge liquidity buildup at the bottom of the range. Why do these liquidity buildups occur? Because market makers are trying to find the areas with the most amount of liquidity to get their orders filled. So they're putting their orders over there. And also a lot of people are putting their stops above the range high for shorts and their stops above the range low for longs. These are the impatient people providing the liquidity for the market makers to fill their orders before reversing the price back down, or the other way around, fill their orders before reversing the price back up. Now this is all a little bit more higher time frame trades. Today I really want to look within this range if we can find the potential setup in which we can find it and target the liquidity before looking for swing trades, right? Now, I think we have a potential long and a potential short scenario developing for the Bitcoin price right here. Let me zoom in a little bit. We can see that if we want to identify the most important liquidity levels, that we have a lot of liquidity resting above this high. Why do we have a lot of liquidity resting above that high? I will go a bit deeper into that on Friday's YouTube video, where I will talk about stop losses and liquidity. But we can see the slow grind upwards. Everyone that is shorting this slow grind upwards, targeting this low, and this low, where do you think that those people will all put their stops? They're all putting their stops above this high. On the other hand, we have a beautiful liquidity buildup to the downside. We can see that we have constant higher lows being formed on the Bitcoin price. We don't see any bullish sweeps while we are seeing this grind to the upside. So kind of expecting that liquidity buildup to get taken out at some point as well. Now, during these liquidity buildups, that doesn't mean that you have to take the lowest low as your main liquidity point. No, you have to get into the mind of the retail traders. Most of them would be longing this move over here or shorting. We discussed the shorts are putting their stops over here, but the longs are putting their stops obviously at the beginning of that grind upwards, or they're going to put their stops below the low over here. Those are two main liquidity pools. So we are going to mark that out as well. So now we know that if we want to look for shorts, we at least want this high to get taken out. If we want to look for longs, we at least want these lows to get taken out, because we obviously always want to enter where the retail traders are getting stopped out. Now, why do we want to enter where retail traders are getting stopped out? Because retail traders are providing that liquidity for the market makers to fill their orders. And we know that we want to get filled where the market makers get filled, because then we are on the right side of the trade, because the market makers are usually the people that make the profits. So we want to get in where they are going to get in, and we want to get out where they are going to get out. Okay. Now, what is interesting with these liquidity pools is that in this case, above this liquidity pool, we have this beautiful supply area. So we can see this beautiful order block over here, right? And what does this order block over here remind me of if we zoom into these current candles? So we see a big green candle followed by a red rejection candle, green inside bar followed by a red breakdown candle, right? If we're going to go back into the past, big green candle followed by a red rejection candle followed by a green inside bar candle followed by a red breakdown candle. Very similar candlestick patterns. Now, what happens over here is that we front run that order block with this high and with this high. So we build up liquidity exactly where we had this supply area. What happened? We tapped into the supply and we formed a beautiful short position. So if you were entering at the bottom of the supply, stop above the supply, targeting the range low over here, you got yourself a beautiful 4.39 RR trade that played out beautifully. We even could have shortened it once again over here, and now we have swept it and we have created a very similar structure. Supply, inducement, liquidity, potential short trade developing for the Bitcoin price, in which we can put our stop above the range high. If we want to target that high time frame, range low liquidity, we got ourselves a decent RR of 3.26. Now, would I be setting limits over here? I'm not too sure yet, to be very honest. I'm trying to be transparent here. I'm not too sure yet if I will set limits. I will wait until about half an hour before CPI, because if we are going to pump into this supply a couple of hours before CPI, I'm not willing to take this trade. But if we're going to hover around here for a bit and then CPI starts and we wick into the supply, reject it, that could be a very nice short opportunity. All right. Potential short trade developing within this supply over here, targeting this liquidity first, afterwards targeting this low and this low. Something that is interesting as well is that if we go onto the 4-hourly time frame and we remove all of these drawings for a second from our chart, is that we had this huge wick created. I taught you guys these wicks are a big draw in liquidity, so people that shorted over here, they got wrecked because they forgot about the draw on liquidity. Now we also know that these wicks get filled at least for 50%. We can see that our 50% fill level is over here. So this high didn't fill it for 50% yet. So you could also decide to put your entry a little higher at the 50% fill level. That will also increase your RR a little bit to the downside. So more potential profits, but obviously also the risk of not getting filled. What is nice about this 50% fill level is that over here, we got this hour 4 order block aligning with that 50% fill level, okay? So if I map out this hour 4 level, we can see it aligns perfectly with that 50% fill level of that wick. So that could be a nice confluence to enter a potential short trade. Now looking at potential long trade, guys, we marked out our liquidity, which is below the lows over here. Below those lows is where we have an interesting order block with this red rejection candle over here. Why is this an interesting order block? Because if we zoom in, we can see that above this order block, we got the confirmation candle, breakout candle. In between those candles, we formed a bullish hour 1 fair value gap, as you can see over here. And that's extremely important because that means that the order block is actually bullish. Now, If we decide to go for the downwards liquidity first, this might provide a potential long opportunity. What is interesting about this potential setup is the fact that if we are going to take the fixed range volume profile of the entire range, we can see that the value area low is aligning perfectly with our area of interest. And that's a very nice confluence indeed, guys. So, pretty clear game plan. If we are going to go for the lower liquidity first, we can start looking for longs, targeting the liquidity over here, and eventually maybe even the liquidity over here. Now, if we are going to go for the top liquidity first, we can start looking for shorts, targeting this liquidity first, and afterwards we can target this liquidity and this liquidity. Something that you have to keep in mind is the fact that if we take the top liquidity first, the long idea isn't valid anymore. If we take the bottom liquidity first, the short idea isn't valid anymore. Why would it invalidate the other trades? Because the draw on liquidity is gone. And you do not want to enter a trade as long as you do not have a clear draw on liquidity. Liquidity is king in confluence with price action. If you do understand both of them, you will become profitable. If you guys do have any questions after watching today's YouTube video, please let me know in the comments down below. Make sure to smash out the like button, make sure to subscribe to this YouTube channel, and guys, make sure to join our free Discord. It is growing every single day. You love to see it. I will see you guys on Friday's video, where I will drop an educational video on liquidity and stop losses and how to not get stopped out anymore while I'm enjoying a few days on Ibiza. Thank you guys for watching, and I'll see you guys on Friday's video. Ciao, ciao!